All right, I'm going to quickly go over some different crypto / stock market analysis / precious metals as well, commodities like oil and gold. So let's kind of get started with Bitcoin. I'm going to kind of go over this pretty quickly on terms of where we're at in the markets. It looks like we are seeing a death cross between the two weekly moving averages, between the 50 weekly moving average and the 20 weekly moving average. And if you look right here, we're below those. They're both negatively sloping, and we're going below that. And that doesn't indicate bullish structure whatsoever, not even close. If you look at other times we have sort of done this, if we kind of want to go way, way back, we look right here. This sort of cross right here resulted in a pretty decent sized drop. If we look right here, from that point of the cross, we did drop around another 52% from there. If we want to look right here another time, this was during the range, the 2018 range. And if you look right here, for what we dropped by around another 50% from there. I don't think we're going to drop 50% because I do think that we are a lot less volatile in terms of market cap. The market cap is a lot larger now than it was earlier, so it is a lot harder to move. So I think more or less it's probably going to be towards the 200 weekly moving average, which if we were to just teleport right now, actually would be 50% from here, but not from the range bottom. But I do think that when we do get towards there, I think it may be a little bit higher. It'll probably be at around like 22,000. But there's also some confluence at around 25,000. And why are these moving average crosses bad? It's because there's a lot of people that are sort of short-term investors, some dumb money that's involved with the markets. I wouldn't really say too much dumb money, but a lot of short-term investors that have way too much overly invested into it that they cannot afford to lose at all. And, you know, when it's not going right for them and they're down over the last year, you know, with these moving averages, it's kind of like a game of psychology. Like a lot of the people that have been holding for quite a bit of time, especially when it's these weekly moving averages, when it's daily moving averages, it's not as severe. But when it's these weekly moving averages and we've been kind of not been going up for over a year, a lot of these people are just like, I'm over it, I'm done. And that's when we kind of get the last bit of sellers out of the market. So that's sort of what is up with that. Whenever I talk about short-term bearish scenarios, I'm only talking about the short-term, meaning the next few months at most. Actually, probably the next 6 months at most. But probably more like the next 2 to 3 months, I'd say, are bearish. My yearly outlook, my multi-year outlook, my decade-long outlook is super bullish. That's why I still DCA into the market, but I'm short-term bearish, so I'm not lump summing a lot of money into crypto right now. I'm only DCAing a little bit into Bitcoin. That's about it. And I put 250 every half a month. I max out my Roth every year into Bitcoin because I just believe in the fundamentals so strongly. I think in my opinion, this is not financial advice. I'm not telling you to do this, but personally for me, I personally think that Bitcoin is probably one of the best long-term investments for retirement, which I am not taking out any money in my Roth IRA retirement account until 2065 because I'm 21 years old right now. I was born in 2000, so I got a lot of time left. So, you know, I'm pretty patient. I will gladly welcome these dips, and I would wonderfully go with some of these bear scenarios, like the weekly moving average structure that I was talking about in this previous video. All right, let's get on to some stocks. Let's get to the SPX to kind of show where we're at with stocks. If we look at where we are with stocks, if you look at Fibonacci levels from all-time high to swing low, it looks like we are approaching some weekly resistance right at the 20 weekly moving average area. The green is a 20 weekly moving average band. The yellow is the 50 weekly moving average band. So if you look right here, we were able to get above the 50, but it looks like we're getting some rejection along the 20 weekly moving average area, which actually comes in confluence with the golden pocket from all-time high to swing low. From all-time high to swing low, that's where the golden pocket is at right there. Some nice confluence with some weekly moving averages and actually some structural support, because if you look right here, let's do some horizontal lines. We sort of got this. Is there any structure? No, I don't think there's any. There's this little resistance right here. Wait, where are we at? Right here. Oh yeah. There's definitely some confluence right here. Is that resistance right there back in September? That became support back in November, and it broke, and it became resistance again, and it's resistance again. So all in all, that sort of area is strong resistance that is struggling to break above. And right here, if you look at Fibonacci's, that's right around the 78.6% area when you measure it from this high to this low. And it looks like we can't really get many weekly closes above that. And also, if you look at this as well, these moving averages are crossing over as well. These 20 and these 50 weekly moving averages are rolling over. The 20 is already rolled over, and the 50 is sort of flattening out, and it's looking like it's going to roll over as well. If you look at other times we have done that, we look at the COVID capitulation, we look at the 2018 situation right here. And I kind of do think that we are sort of in a similar situation to more like 2016/2018 in terms of where we could fall to in terms of moving averages. I don't think that, I'm personally not predicting that 2008 is going to happen. I don't think that this crash is going to be that bad, but I do think that we could get to the 200 weekly moving average, which is coming in at around $34 to $3,500. So I do think within this sort of area for SPX, I do think that there's some pretty strong, there's going to be some support right here, which kind of comes in confluence with this. And I think it also comes in confluence. So it comes in confluence with the previous pre-COVID high, and it also comes in confluence with some fib levels. What fib level are we talking about here? From COVID high to COVID low, it's looking like 38.2 to 50% is around. Where are we? Nah, I don't think there's much confluence with. It looks more like 38.2 is sort of the area. Are these on log? Let's see. Yeah, these are log scales. I like the log scale fibs better. But I do think that the 200 weekly moving average area is going to be the support, the bottom. And it's significantly lower than where it's at right now for SPX. If you look right here, it's another stinking 20% drop from where we're at right now, which in stock market terms, a 20% drop is huge. A 20% drop is massive for stock market corrections. It's not like crypto. The market cap is a lot higher. And that's why I don't think that 2008 is going to happen either. I'm not personally banking on a 2008 to occur. Now let's talk about what I am the most bearish on, which is oil. If you look at oil on the monthly RSIs, I'm looking at monthly time frames for this. We are sort of in this, we're sort of overheated. We are in massive resistance at overbought territories right here. I wouldn't say resistance, but we are in overbought territories. And if you look at times when the monthlies are overbought, we look at right here back in stinking 2011-ish. Yeah, in 2011, we dropped by around 70%. If we look right here, back in 2008, we dropped by 70%. When the monthly RSI got over, actually right here, the monthly RSI did get an overbought, so it did go into a nice uptrend, actually. Oh, oh yeah, this sort of area actually went up quite nicely. This one actually did pretty well. I did not even see that. This one went up around another 40%. Wow. When this monthly RSI peaked, or went up to there. But if you look at some other scenarios where we sort of did peak, we look at right here, back in 2000, we dropped by 50%. We dropped by 60%, except that wasn't overbought right there. But here we dropped by 60% when we were getting a bit overheated. Right here, we did drop by 56% here. So there was one exception where we didn't drop so heavily, but there is exceptions to every rule. There is no certainties at all in this market. It could easily go up by a lot. But if you look right here to what I think might happen to oil, and I do think that the sentiment is super euphoric about oil right now. We are seeing people saying that you should sell your car if you make less than $300,000 a year. That's sort of how euphoric we're getting. We did get some nice bounces, though, off the 50-day moving average area, which is quite nice. But we're running into resistance right now at the golden pocket. And I kind of drew this a while back on my Twitter. On Twitter, I sort of wrote down... when it first came into play, right here, get it to 115, then dump the Ponzi back at 107, and now we're at 115 right now, and we'll see if it stalls over there and rolls over, and then kind of creates a lower low. But if you look in terms of like monthly RSIs, I don't think the risk reward is all that amazing at all where we're at. And we're sort of getting this little wick up to the upside, and those wicks to the upside are not bullish at all. When we get these massive wicks to the upside, like if you look right here, like at this sort of time when the monthly was overbought right here, we were getting some wicks to the upside, but they're not as big of a wick as this wick. These wicks are not bullish to the upside. But anyways, let's look at some gold now. Gold, oh my goodness, that is a terrible looking monthly chart. That looks like a shooting star type chart. Gold is not bullish at all. This is my last sort of analysis on gold. Gold is looking really toppy right now. This is not a divergence anymore, a monthly divergence whatsoever, because we aren't even creating higher highs on the monthly, at least of right now. But if you look at the RSI, or the monthly RSI trend, it is not up at all. We were overbought back in 2020. Jeez, come on, man. Jeez, my phone, stupid pile of trash phone. But let's look at some gold. Gold is kind of glitched right now, but if you look right here, yeah, we are not bullish at all on the month. It's not looking amazing on the monthly. There is sort of this cup and handle pattern, but I'm not too big into patterns. I look more at like where the momentum is and how strong the momentum is. It looks like the momentum's pretty weak on the monthly. This sort of move up, especially with the spiky wick to the upside, is not strong whatsoever when we keep getting spikes at this $2,000 resistance level right there. So, kind of looks like a Bitcoin it kind of looks like the Bitcoin top from back in November. If you look at the Bitcoin top in November on the daily time frame, this is Bitcoin on the monthly time frame. That zoomed out. Let's go to more of a cleaner chart that I can kind of zoom out a bit more. Let's go to the USDT one. This was back when I was doing wicks. We sort of had this same exact top looking pattern right here. And if you look right here, we kind of went down to pretty much the range low on the daily time frame. So I do think that gold as crazy as it sounds, could go back to the range low on the monthly time frame. Like, what range low I'm talking about is this range low back in the stinking 1300 area, because it's literally looking distributive up here. It's looking distributive. Momentum's kind of weakening up towards this area. You can see it in the RSI. The RSI is starting to trend down as soon as we reach that area right there. This area is a distribution area before we end up going down even more for gold. So for gold, I am not bullish at all on gold either. I'm not bullish on precious metals. I'm not bullish on oil. I am bullish on the VIX. I think the VIX is pretty nice in terms of structure. We're sort of getting a nice little uptrend. We're crossing over 50 on the RSI. As you can see right here, we're kind of creating a nice little uptrend right here. And, the RSI is looking relatively bullish as well. The RSI is trending up, and the MACD is getting a monthly bullish cross. Well, Bitcoin is getting a monthly bearish cross, or already had. The SPX is getting a monthly bearish cross. A lot of these indices are not looking good on the monthly time frame. Gold and oil is also not looking too amazing in terms of overextension. I think oil is overextended. It's trading at resistance right now. I think gold is weak. I think gold is actually very weak when you zoom out and look at the big picture. And when you look at the big picture on Bitcoin, if you look at the monthly time frame, and if you zoom out extremely far, this is Ethereum Bitcoin. I don't even invest in any of these other altcoins. I just like looking at their charts. Let's look at the BLX. ADA, I could talk about ADA, but I'm kind of running out of time. If you look at sort of the Bitcoin long-term time frame, it's just straight up. It's an uptrend, and I think this uptrend is going to continue because of the fundamentals. If you look and you zoom out and kind of see like where we're sort of heading right here, kind of looking at the direction of the market, it's pretty stinking good. And a lot of these drops aren't even going to matter when you look in the next like 5 years or so, because the fundamentals are super bullish. And that kind of also speaks for the long-term outlook on gold, is that for gold, the long-term outlook is bearish because the fundamentals are not super bullish at all for gold. It's not as scarce as people think it is. You can recreate gold in terms of fundamentals, and but gold is not bullish. But anyways, that's sort of what I have to get at. I could maybe talk about Tesla as well. Tesla's right at resistance right now. I do think that 345, as crazy as it sounds, 350-ish is a target. I'm not bullish on Tesla at all. But anyways, that's all I have to say for this. So yes, bye.